Hey everyone, and welcome back to the Tesla Stock Podcast. This week, the walls started closing in on the entire EV industry, with legacy automakers like GM and Ford sounding the alarm about slowing demand and taking massive write-downs. But with the competition pulling back, is this a golden opportunity for Tesla to retake the market? Or is the company facing a double whammy of its own? With the stock now trading around the $423 mark, we need to talk about the shrinking pie. Our top story is the growing sense of panic across the auto industry as the new, unsubsidized reality of the EV market sets in. This week, General Motors announced it's taking a $1.6 billion charge from its EV investments in its upcoming quarterly results. This follows a warning from Ford's CEO, Jim Farley, who said he expects demand for EVs to be slashed in half now that the $7,500 federal tax credit is gone. And Stellantis, the parent company of Chrysler and Jeep, has officially scrapped its target of going all-electric in Europe by 2030 and is backing off its ambitious targets for the U.S. as well. This is a massive reset of expectations. But in this conversation about a contracting market, Tesla has been a notable outlier. With its record-breaking third quarter, it seems to have weathered the storm better than anyone. Some, like investment firm Automotive Ventures, believe this retreat from legacy automakers could actually be great news for Tesla, allowing its market share to rebound. However, they also warn of a double whammy ahead for Tesla. A combination of reduced overall EV sales in the fourth quarter and lower margins on the cars they do sell, thanks to the new, cheaper standard models. It's a classic case of a bigger slice of a smaller, less profitable pie. And that brings us to our second story, the final high-stakes showdown over Elon Musk's historic $56 billion pay package from 2018. This week, lawyers for Tesla argued before the Delaware Supreme Court that the shareholder vote from last year, which reaffirmed the pay package, should be enough to restore it. This is the final stage of one of the biggest corporate legal battles in history, after a lower court judge threw out the entire package back in January of 2021, ruling that the board was not independent from Musk when it approved the deal. Tesla's lawyers are arguing that the shareholder vote last year was the most informed stockholder vote in Delaware history, and that it should be respected. The lawyers for the plaintiff, on the other hand, argued that allowing a company to simply re-vote and overturn a court decision after a case has run its course would make lawsuits interminable. This case has massive implications. If Musk loses the appeal, the company has already agreed to a replacement deal that could cost $25 billion or more in accounting charges. But more importantly, the original ruling has become a rallying cry for critics of Delaware's corporate law and has already prompted several large companies, including Tesla itself, to reincorporate in more director-friendly states like Texas. A final ruling from the High Court is expected to take several months, but it will be a landmark decision no matter which way it goes. And while the company is fighting for its CEO's compensation, another one of its key businesses is showing signs of life and expansion. Our final story is that Tesla Insurance is preparing to launch in a new state for the first time in years. The company has just filed to update its auto insurance program in Florida, which would be the first new state to get Tesla insurance since Utah and Maryland launched over 3 years ago. The company has also reportedly filed applications to launch in Georgia, New Jersey, and a few other states. This might seem like a small piece of news, but it's actually quite significant for the long-term story. Tesla Insurance was launched back in 2019 with the idea that the company, which knows its own cars, parts, and repair processes best, could offer a better and cheaper product to its owners. It also has the ability to use its real-time telematics and safety score to adjust rates based on actual driving behavior. This business has struggled to expand and is still only available in 12 states, But this move into a huge market like Florida is a sign that the company is finally ready to push this business forward again. It's a crucial piece of the puzzle for a future of autonomy, as a robust, in-house insurance arm will likely be necessary to cover a fleet of company-owned robotaxis. So, to sum it all up, the entire EV industry is in a state of panic as legacy automakers pull back on their ambitious targets in a new, unsubsidized market, creating both a risk and an opportunity for Tesla. The final legal battle over Elon Musk's historic $56 billion pay package is now in the hands of the Delaware Supreme Court, with massive financial implications for the company. And after years of stagnation, the often overlooked Tesla insurance business is finally showing signs of a renewed push for expansion. Starting with the key state of Florida. This brings me to my question for you. With legacy automakers pulling back, do you think this is a golden opportunity for Tesla to regain its dominant market share and run away with the market, as one analyst put it? Or are you more concerned about the double whammy of a shrinking overall market and lower margins, which could make the next few quarters very challenging regardless of what the competition is doing? Let me know your take in the comments below. As always, if you found this breakdown valuable, please hit that like button, subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an update. Thanks for listening, and we'll see you next time.